All right, guys. Let us look at jump 10 index, jump 10 index. I'll zoom out so that we can all see what is actually happening. What I want you guys to understand is that when you analyze the market, it is important to start from a higher time frame to get the whole direction of the market. Remember, I mentioned that in the market, I only use four patterns. I only use four patterns. I'm on daily chart right now. The reason why I am using only these four patterns, it is because they appear now and then in the market. When I say now and then, sometimes it happens that you can stay for a few days without having any trade. But as soon as you get that trade, you know what is going to happen. So, when you approach the market, start from higher time frame. Look for the direction of the market first before you look for entries. Once you get the direction of the market, and then that's when you can look for your entry. And your entry must be based on the direction you got from a higher time frame. So if we look at this jump, let's move a little bit. If you look at this jump, it is just moving down. Can you see that? It is just a downtrend. Unfortunately, on this derivative trading view for tariff, we don't have higher time frames such as monthly and weekly. It starts from daily. Therefore, we won't have much information. But if you go to MT4, I'm sorry, MT5, you're gonna get a continuation pattern on which time frame is it? On monthly. That shows that the market will continue to the downside. And again, as soon as you get that continuation from monthly, you now know the direction of the market. Now you know that the market is pushing down. So what you have to do, let's say for an example, you want you are not comfortable to take the continuation pattern from higher time frame, of which is something that I understand because of the continuation pattern from higher time frame. It's gonna be big when it comes to stop loss. Therefore, what you can do, wait for the market to move away from your stop loss. I'm sorry, from your continuation pattern. Now, what you're going to do, you'll come to weekly or daily just to look at what the market's gonna do, confirm with the market structure from the smaller time frame that the market is now changing the direction. Let me zoom in. For an example, the market left a continuation pattern here. The market left a continuation pattern. The last time I was live, unfortunately, I have so many videos that I did not upload due to the sound. So now you can see, I said when the market is going up, we pay attention to the previous trend. When the market is coming down, we pay attention to the previous trend. As much as we're going to be paying attention to the previous trend, we also have to focus on the current trend. So if we look at what they did here, you have a break of structure here. Can you see that? Just that my line is not that accurate. You have to mark it as a zone. Let me erase this one. So if I mark that one as a zone, the market went up. Can you see that? After the market went up, it came back down. As the market came back down, respected this break of structure, and then it went up again. Back to what? Back to the resistance. As the market went back to the resistance, after that, they have broken what? They have broken the resistance that was tested as support. The market went down. That's a confirmation of a new trend. That is a confirmation of a new trend. Now you see that, oh, okay, from here the market is going down. All right. Now, let me just use this instrument. It's okay. Now you notice that, okay, from here, what you got is a trend line that is pushing the market up. This trend line will be more visible if you go to below 8 hours. Okay, let's just say 4 hour chart. It will be more visible. So here you got your first time touch. You got your second time touch. It's just closed because of we are on daily chart. And then this is the third touch. If you look carefully on the third touch, let's use a line chart. If you look carefully on the third touch, moving back a little bit, you will notice that here you have a fresh support. This fresh support is matching with the trend line on the third touch. What does that mean? It means those who are looking for buy opportunities, they'll push the market up a little bit. Those who are looking for, for support and resistance will be looking for buy opportunities. Those who are trading trend lines will be looking for buy opportunities as well. Now, you notice that the market's going to reverse there. As the market is going to reverse there, what are you supposed to be looking for now? Your exit point. This one is very much important. But now, in this scenario, how do you know where to get your exit point? You have to move to smaller time frame. You have to move to smaller time frame because of now you don't have much information. The market is now pushing up. Your job is to pay attention to the previous trend. There must be something that is causing the market to move up here. So let's go down to smaller time frame to find out what happened. I'm moving to 8-hour chart right now. On 8-hour chart, we don't have much information here. Let me add the trend line to verify what I see here. Let me zoom in to check the touches on the trend line. Okay, the trend line is not accurate. It was it it has 2 touches only. If you look closer, the trend line just has 2 touches. And then here I see that we have our support. But let's go down to 4-hour just to see what happened there. Let's move to 4-hour. I just want to check here specific. Let's move. Let me highlight. Let me highlight like this. Let's move to 2-hour chart. On 2-hour chart, I don't know what we're gonna get there. Oh yeah, there's a continuation pattern, but it's not that convincing. Let's move to 1 hour just to check what is it we got there again. Remember, guys, whatever you do, don't rush to buy, don't rush to sell. Take your time and have all the answers you need before you start buying. So if you check here, you have that continuation pattern. If you use a line chart like this and add your horizontal line accurately on the resistance, and then now what we have to do, we have to move to the right hand side to check what happened when the market came back to that horizontal line. The market went back to the resistance. The main reason why the market went up again, it was just a smaller resistance here. All right, now we have to work based on this information. The market is now moving to the downside. You have to start looking for the patterns that you need now in the market. Let's move back to daily chart. Now that you know the cause of the market pushing up, that means that's going to be your exit point. If you only trade on daily chart, you'll be looking for opportunities as the market is going down. If you trade on smaller time frame, let's move to 4-hour. You'll go to 4-hour to look for opportunities. You'll go to 4-hour to look for opportunities. So this is our 4-hour chart. You can see that the market moved sideways for a while before it goes down. Here, you got your support that was broken. The support that was broken is going to be more visible if I go to 1-hour chart. So here, this is your support. It was broken. It went down. The market pushed back to test the broken support as what? As resistant. As the market went down, it created a continuation pattern. I assume everyone knows what a continuation pattern is. So the market went down, it came back up, it continued to the downside. It continued to the downside. Now, as the market continued to the downside, it went back again as the market was going back. Pay attention to your left-hand side. What do you have? A continuation pattern that is pushing the market way down. The market went down, created a continuation pattern again. It continued with the downtrend. Now, you know what to expect here. Hence, I'm talking about the continuation pattern. You know what to expect specific. The market push back again to the continuation pattern. Then the market continue to the downside. Later on, the market went up again. And then the next thing, the market went down. It went up again. It went down. It went up again. And then a continuation pattern going down. Now, if you look closer there, you'll notice that, okay, they left a trend line. Let me remove the line. They left us a trend line there. They left us a trend line. Hence, I mentioned that in the market, I use only 4 patterns. How many opportunity was I going to get here in the market? This one is very much important. I was going to get the breaker structure here as my first entry. Going down, this was going to be my second entry based on what? Based on the PCP. That means now we have two opportunities based on the strategy that I'm sorry, based on the patterns that I am using in the market. The market left the first time touch and the second time touch of the trend line. It went down. It came back again. I was going to get in for the sake of the trend line, continue with the market to the downside. Now, as the market continued to the downside, I got a continuation pattern. I was still going to get in here just because of the continuation pattern. If you don't know what a continuation pattern is, I think it is time you have to go and check what a continuation pattern is. I will repeat this one. A continuation pattern will always appear in the market. As long as you analyze according to the direction of the market, you'll get an accurate continuation pattern. But if you will fail to analyze correctly, you won't find a correct continuation pattern. You will not find a correct continuation pattern. All right, let's continue moving to the right-hand side. Now, from there, the market paused a little bit. You can see it went up. It came back down to roughly this level at your horizontal line there, or mark it as a zone. Mark it as a zone. If you mark this one as a zone, you look at what they did here. You look at what they did here. Highlight this one again as a zone. This is your resistance. This is 4-hour chart. The market was just consolidating here, just moving funny. So you can also mark this one as your zone like this. Yeah? So this is what they did. They pushed the market up. They came back down. They went higher. If you pay attention to your left-hand side, this is the left-hand side I'm talking about, you have your breaker structure. It comes from our far left, there. Can you see that? This is your resistance. It was broken. It became the support. The support was broken. It was never tested. Boom. They tested the support as what? As a resistance. Instead of going down, they push the market up higher again, and then they move to the downside. Why? Let me erase. At your trend line and just observe. Here's your first time touch. Here's your first time touch. Here's your second time touch. There's your third touch where you're supposed to find yourself selling. The market continued to the downside. As they were pushing the market down, let me erase everything in the chart again. As they were pushing the market down, look at what they did here. They left a breaker structure. Guys, whatever you see in the market, whatever they will leave in the market, bear in mind, they will come back for it. So don't just jump in just because of you want to trade. Trade because of you see an opportunity. Trade because of you know that, okay, now I have a fully formed pattern. All right. So now you see that they left what here? They left a breaker structure. And listen to this, guys. I will repeat this. Whatever that they will do while they are going to that particular direction, bear in mind when they change the direction, everything they left, they will use it into their advantage. For an example, now they left a support that was not tested. They continue to the downside. They left a PCP that was not tested here. Here is the PCP. So now, when you see a PCP, it means the market will go back to the PCP and continue with the trend. So this PCP is pushing the market down. This goes back to what I said. When the market is going up, focus on the previous trend. Why the previous trend specific? Because of there are hidden things there that you need to pay attention to so that you can avoid taking unnecessary losses. Imagine if you had someone knowing very well that the market is coming from this level, it's supposed to go back to test the broken support as what as a resistance. They started buying here. Their exit point was just on that resistance. The market did not reach the resistance. But if you don't know what a continuation pattern is, you won't be able to know the reason for the market to turn here. So let's highlight the continuation pattern. This is the continuation pattern. A PCP, it's a potential continuation pattern, guys. I will repeat this one. A PCP, it's a potential continuation pattern. So this is the PCP. Whenever you'll see this one in the market, you must know that the market will continue to the particular direction. Yeah? But sometimes you'll find a continuation pattern that won't be respected. It is because of that continuation pattern will be against the trend. That's the only reason. Yeah? Sharp. So if we look closer here, the market went up, it came back down here. And then it went back to the continuation pattern at your trend line here. Push it all the way down. This is the main reason why the market turned and changed the direction. This is the first time touch of the trend line. This is the first time touch of the trend line. And then what are we expecting now? We are expecting the market to come back and test the trend line. For an example, this one is for those who want to trade trend lines. Now, if you trade trend lines, you need to get this one and this one. When the market comes back to this one, you know that you're looking for buy opportunities. So the market went all the way up. You can see it was going straight to the trend line. And you're going to get more trend lines because of you had trend lines that was broken there. They came back to test and then they continue moving up. Where was your exit? Your exit was accurately onwards on the continuation pattern. Those who are trading continuation pattern were patiently waiting for the market to come back to this level so that they can step in and sell. They waited for days. They waited for days. The market came back to the PCP. It just went straight down to the trend line. Now the trend line was like, all right, I'm going to be pushing the market up. Now look at the same thing that I was saying to you guys. I said when the market is going up, pay attention to the previous trend. The reason why I say pay attention to the previous trend, it is because of things like this. If it was in for the PCP they left on the left-hand side, the market was not going to turn here. The market turned here specific because of this continuation pattern. If you remove this continuation pattern, the market was going to continue to the broken support and test it as a resistance. All right, fine. Now you notice that the market changed the direction here. It went up from the trend line. Those who are trading trend line were stepped in and pushed the market up. The market went up. It came back down. You can see the market went up. It came back down at your trend line. From here, push it up like this. Push your trend line up like that. So it means here's your first time touch. Here's your second time touch. You'll buy on the third touch. Look at how the market continued to the upside. But now let's forget about this uptrend. Let's go back to this information. This broken support was tested here as a resistance. Can you guys see that? And then this resistance pushed the market all the way down to the trend line. This trend line pushed the market all the way up. Look at this again. Look at this again. Someone will be like, okay, we see it. There's a trend line coming from the left-hand side that was broken there. Let me drag the screen down a little bit like this. I want you to understand the movement they do, guys. Now, if you look closer, you will notice that you got the first time touch there, you got the second time touch there. Someone expected the market to continue to the downside. It was broken. They went up. It's fine. You took a loss. I said to you, don't cry when you take a loss. Only if you know how to get your loss back, you'll smile. Now, draw your trend line like this. Let's focus on the trend. The market is now going down. As the market is going down, I said to you guys, pay attention to the previous trend. The previous trend had the support here. I'm sorry, the resistance that was broken. And at the same time, we have a trend line that was broken as well. It means the market will push to the trend line. Fine, the market pushed down to the trend line. Now you know that the market's going to change the direction a little bit there, even though the market is going down, but the market's going to change the direction there. So as the market's going to be changing the direction, now what do you have to do? You have to pay attention to the current trend. The current trend starts from here. It's a downtrend. This is the current trend. Can you see that? So now, once you pay attention to the current trend, you will then notice, oh, okay. So if we pay attention to the current trend, what do you get? A break of structure. Let me highlight it accurately. Uh, this is the break of structure. It is more clear now. Hope you guys can see. It is more clear. Here is your support. It was broken. It became a resistance. You continue to the downside. You just continue to the downside. What is important here, guys, is for you to understand what you are using in the market. It's for you to know what pattern you use in the market, what strategy you use in the market, what is important to the important to the or to the important test. So what is more important, guys, is to understand the direction of the market first and then take trades that are corresponding with the direction of the market. That's where you'll start seeing the magic. What I want us to do from here, I want us to go to higher time frame. I'm on 4-hour chart here. I'll move to 8 hours. I will move to 8-hour chart and then we focus on the 8-hour chart. So if you look closer here, now, those who don't have much experience with continuation pattern, this is 8-hour chart, I'll repeat. The market went up here and created a continuation pattern, and then it went down to the broken trend line, and then it went all the way up to this continuation pattern. On 8-hour chart, where there's a trend line on 4-hour and 1 hour, I'm sorry, where there's a break of structure on 4-hour going down, we have a continuation pattern here. Use the line chart, you'll see the continuation pattern. This is the continuation pattern. You can see that they tested the continuation pattern with the week and then they continue to the downside. So this one is also important when it comes to taking decisions regarding AMA entries. For an example, if you're one of those who like to jump in on a moving trend, you're going to get so much losses here. Imagine seeing the market going down now. You start selling here, you place your stop loss above. The market just moved back to your stop loss. You'll be like, oh, flip, it's a buy, or it's a break of structure here. Oh, flip, I did not notice the broken trend line there. It means we are buying. You start buying here, expecting the market to continue to the upside. The market will go up, but the market is not an uptrend. So there's a continuation pattern there that is pushing the market down. Hence, I said, whatever you do, learn to pay attention to what is presented to you. Buka ukuthi bakupresente ngani ku-chart lakho. Guys, that's 8 hour chart. Can you see that up there? That's 8 hour chart. Now you have all this information. It means uma kuwukuthi you want to find yourself trading like this. You have to learn to be patient in the market. And that's the only thing that will make you becoming profit or that's the only thing that will make you profitable in the market. You don't become profitable by creating opportunities all over. You just wait for the opportunities to come to you and then you get in. You buy, you sell, you're done. Let's continue from the 8 hour chart. After they have tested the continuation pattern, they pushed the market down. They paused somewhere here. They paused. Let me erase everything. Let's have a new trend line coming from the left-hand side, moving to the right-hand side like this. So here, let me erase the whole chart and re-add the trend line, moving to the upside. Now, you had your trend line there. This is your first time touch. This is your second time touch. The market moved back from the trend line. It went up. This is 8 hour chart, by the way. And then the market continued to the downside. You move to your left-hand side. The main reason for the market to turn here, you have your support there on your left-hand side. This is 8 hour chart. It means if you go to smaller time frame, this support will be more clear. So let me erase again. Now, as they decided to break the trend line, if you remove the trend line, this is what you're going to see. Let me remove the trend line. Let me remove the trend line. If we remove the trend line and use the line chart, you will see a continuation pattern. This is the continuation pattern they left. I'll show you a continuation pattern, don't worry. Let's go back. Now, after noticing that continuation pattern, you know that, okay, let me patiently wait for the market to come back to this continuation pattern. Now, it means those who are trading continuation patterns will be looking for sell opportunity on the continuation pattern. Those who are trading trend lines, they'll be looking for sell opportunity on the broken trend line as well. The higher the chance that the market will continue to the downside. The higher the chance that the market will continue to the downside. Now, as the market was going down, it went down, and then for 8 hours, it went up to test the broken trend line and the continuation pattern at the same time. The next thing, the market continued to the downside. It created a new continuation pattern. As they created a new continuation pattern, the market went down roughly to this level. And then the market pushed all the way back to test the continuation pattern. What a what a strong pattern in the market. The next thing you see, the market continues down. It pushed back to the left-hand side, and then boom, it's a downtrend. Now, this is the main reason why I keep on saying, guys, whatever you do, please learn to analyze on a higher time frame. Learn to analyze on a higher time frame. Assembly, because of if you analyze on a higher time frame, you get a clear view of what is happening. You get a clear view of what is happening. Let's go to 4 hour chart and at the horizontal line here. I want to show you something here. Let's move to 4 hour. This is 4 hour chart. You can mark this one as a zone if you want to. If this is our line chart, or let's just move to 1 hour. I just want you guys to see why I keep on saying use higher time frame. Let's use a line chart. Okay, the line chart is giving us something accurate. Let's just highlight it like this. So if you just only use smaller time frame, you'll have a problem when it comes to placing your stop loss. This is the whole, watch, this is the whole break of structure. So if you'll only use smaller time frame, you'll find yourself having your entry here, and then your stop loss just looking like that. Expecting the market to continue to move to the downside. And if you do that, you'll find yourself taking losses that you're not supposed to take. Uze umuntu esekha, ngiyabhaya imarket yami ayibhayi iya ku-stop loss sami. Kanjani manje? The next thing maqeda ukushaya i-stop loss khanya iya ku-profit. Yazini, broker yami scam vele, blah, 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 blah. You did not go to higher time frame to check what happened on higher time frame. Or higher time frame says to us, here we have a continuation pattern. If you have a continuation pattern there specific, it means you have to look for your entry from the continuation pattern. Ngeke ngathi mina laba beka ama-stop losses wabo khona, ila sithatha ama-entries wethu khona. This is going to be 8-hour chart. This is going to be 8-hour chart. Let's move back to 8-hour wethu. Let's move back to 8-hour chart wethu. 8-hour chart wethu now on a continuation pattern angithi, and then we continue to the downside. If you are using MT5, you know why the market 10-year pays on your left-hand side, right? So we don't have that information right now. So here, the market pushed all the way down. How much were you going to make if you got this entry? And then look at the size of your stop loss. And then also check how the market went down. Once you understand the lezi, everything becomes easier, guys. Once you understand what is happening in the market, everything becomes easy and simple. Now, the market went up. When I talk about the breaker structure, I said to you guys, i-support yakho uma kuwukuthi bazoyipenetrate kanje, or i-resistance yakho bazoyipenetrate kanje on the right hand side, it means when they come back to this level, they will break it. When they come back to the same level, they will break it. If you had a chance to get in laphayana wehle nayo kamnandi, it is still pushing down. Umsebenzi wakho here is very much small in the market, guys. And I'll say this over and over and over and over again. Once you learn to analyze the market nicely, you won't have problems. You won't take trades that are not corresponding with the direction of the market. You won't find yourself taking unnecessary losses. Looking at this PCP. This PCP is fresh. It was never tested before. Someone was waiting for the market to reach the PCP so that they can buy. Buying here is very much risky because of the market is a downtrend. I mentioned this before that when you're out there, you want to trade continuation patterns, look for continuation patterns that are corresponding with the direction of the market. Don't just go to any time frame and take trades based on continuation patterns without checking the direction of the market. So if you want to be safe with continuation patterns, check the direction of the market. For an example, if you move back here, you had two continuation patterns here. Actually, I'll say three. Yeah, it's two, man, not three. The first one, the second one. Your job here was to wait for the market to come back and test the continuation pattern so that you can sell. It means, since well, this is 8-hour, guys, I'll repeat. For you to get the first entry here, you had to wait for more than 8 hours. The continuation pattern was created once this candlestick closed below. That's 8 hours. You're doing nothing. And then this green candlestick went all the way up to test the continuation pattern. That was 8 hours. All in all, you had to wait for 16 hours to get your entry there and sell. Ngiyanazi ke nina, you can't wait for 8 hours. You'll think it's a buy, you start buying. You'll think it's a sell, you start selling, the market will go against you. You start buying, the market will keep on going against you because of your impatient. I'll say this again, all the patterns that you'll see out there, that requires you to wait. And I'll keep on saying this is the only key that will make you profitable in the market. You'll go all over looking for something new, something different, something I don't know, something like what. You look for secret. There's no secret here. There is no secret in the market. The only thing that you need to understand is to practice price action and learn to be patient. If there's no opportunity, you don't sell. If there's no opportunity, you don't buy. Manje-ke ngoba ngiyazi ukuthi some of you guys ninama-challenges nifuna ukuba ama-millionaire overnight. That's the biggest thing a creator ukuthi abantu bazithole bethatha ama-losses ku-market. That's the biggest mistake people do with market because of they want to become profitable, they start creating opportunities. Once you start creating opportunities go market, guys, bear in mind, ayikho into ozoyibona ezoba right. So let us by all means avoid that. Let us by all means avoid it. So now we know, let me go to 12 hours just to see, but I won't have much information on this right now because of we don't have much information on our left hand side, not unless I go to MT5. But here, if you check, we don't have much information. That means we'll close this one here. And if you're out there, you trade support and resistance, guys, I want you to understand two things. Because I know for a fact that we have so many people who lost or who don't believe in support and resistance anymore because of the information they were given. I'm on daily chart here. Let's use a line chart. This is my resistance. This is the body of the candlesticks now. And then I'll mark the wicks again. Starting from the left-hand side, moving to the right-hand side. I'm on daily chart right now. If you are out there, you want to trade support and resistance, please pay attention to the touches. I only trade support and resistance if it's the first time or the second time. On the third touch, I'm not going to get in even if the market will go down. But what I do, if the market move to the downside, I just wait for a continuation pattern and then I'm going to get in based on the continuation pattern, not because of the support or of the resistance. The more touches you have on the support or on the resistance, the weaker the level. It's the opposite. I know for a fact that you guys think the more touches we have on the support, the stronger the level. That is why people these days do not believe in support and resistance. It is because of the information they got. The more touches you have on the support, the level is becoming weaker and weaker. So here you can see that the resistance has several touches and then it was broken. The market went all the way up. It came back. People, they know that, okay, here we have a break of structure. We're supposed to step in and buy here. After buying here, the market went down a little bit before it moves up. Why was that? Let me zoom in for you and erase everything so that you can see what these people are doing. If you look closer, what are you going to get here? There's a continuation pattern. You have a continuation pattern there. That continuation pattern is pushing the market up. Now you then see, oh, flip. If it wasn't for this continuation pattern, the market was just gonna go back after testing the break of structure there. This continuation pattern is on a higher time frame, guys. And if you're out there, you want to become profitable with support and resistance, pay attention to the touches. Pay attention to the touches. You will see the magic. You will see the magic, guys. Okay, let me stop here for today, and then we will continue. Let me stop here for today. All right, guys. Wait 1 minute, 1 minute, 1 minute, 1 minute. Ngifuna ukuvala la leshani isengakavali enough. Okay, here we go. And I'm just closing e-Zoom, guys, ne?